overall, let's just get right into this call. I'm sorry. Well, yeah, let's get started. So, as y'all can see, this is the DXY, right? And we have had a price action review. That's precisely what we had previously. And I went overall through what I was expecting for the DXY, all right? Last week, right? And you can see pretty much it played out real nicely. But now, next week, what I'm looking for is just a continuation of this week, right? And in the last lecture, mini lecture, I taught you guys sequencings, all right? And the sequencings I taught you guys was selling program, and then you have a market maker sell model. So I have buy swing, sell swing, all right? That's what I taught you guys, and that's precisely what we're gonna have again now, all right? So just stay tuned now, because here comes some massive sauce. As I've taught you guys in the last call, that when we usually see a full week of selling, which I'm anticipating this week. So what I'm anticipating is actually Monday creating the high of the week. Alright, so I'm anticipating Monday, high of the week, Tuesday lower, Wednesday lower, Thursday lower, Friday lower. Alright, more or less moving into this. What's that? That's the rejection block we've talked about. Alright, because now I'm overall not going to go through my whole bias. I'm only going to go through partially and not covering every single time frame, because you guys need to stay updated upon the calls. I mean, you guys need to understand what I'm looking for, so I don't need to repeat it in every single call. I think that's better for everyone, right? Is it better if yes or no for everyone? Just write yes or no in the chat. Yes, perfect. So you guys don't, need to hear the yap, all right? And instead we're going to get to the sauce. And as I've taught you guys in the last lecture, more or less, after a week of selling, alright, after a full week of selling, what you can expect is next week starting overall, alright, the prolonged market maker buy model, alright. Thank you so much, even on the 2 speed, bro. I'm trying to move fast here. So if after a prolonged week of selling, Monday, Tuesday, Wednesday, Thursday, Friday, lower in one singular direction, what we usually see is the low getting settled in on a Tuesday. So where do we expect the low getting settled in? We expect the low getting settled in on this rejection block, right? Which we have talked about for a couple of weeks, which is my John liquidity. So Tuesday low right here, alright? So 1 week, full week of selling. I think this cost encroachment will be the high. Right here, the level I've annotated. High of the week, bam, high of the week, bam. I gave you guys the level. Lower, low of the week. Next week, Tuesday low right here. Just sweeping that. And after that, what I think will happen is that will overall drive right up into what? Alright, because as I've told you guys, Tuesday after a week of selling will always be the start of the buy swing. Alright, or the sell swing. Alright, in this case, I think it's going to be a start of a buy swing. So we're going to have a buy swing up to where? Up to premium, like I've talked about as well. Where's the premium? Breaker block, favor gap, unicorn right here. So I think this will be the high, which is also in a premium. If you take from this swing high to this more or less projected swing low, right? Premium right here, and that's just because the externals is bearish. I'll not talk about the externals, but the externals is bearish, right? And then it's going to be bullish. If they're bullish, we're going to see a Tuesday low, as the sequencing, IPDA alignments, etc., is 100% correct. You're going to see us trading up here, and after that, we're going to see a market maker sell model. So in here, we're going to create an original consolidation. Market maker sell model. Alright, buy swing, sell swing. Alright? Everybody understood? Yes or no? Yes or no in the voice chat? No? Yes. Perfect. 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 Because you guys need to understand next, or pretty much the previous call, for you guys to understand this. But now, like, when you understand this is eye-opening, because this is what ICT always uses. In all of ICT's videos, this is what ICT uses. He uses IPDA models or IPDA programs, right? Which is programs derived from the IPDA. Market maker model is one. Buying and selling program is one. Alright, those two or those three are pretty much the ones you guys have. So now you know pretty much next week. Now you know the week after that, and now you pretty much know us driving up to the premium and more or less driving down lower. So if I put this in context, I think driving up higher, lower, consolidation started form, derived up higher. Of course, we're gonna have an reconsolidation at around this swing low to this overall projected swing high. Why from this swing low to this swing high? Because you can overall grade this price swing, so you can use gradient swings. It's a thing I've talked about as well. Yeah, I'll post this on YouTube as well with the last lecture. So original consolidation, grade price swing, you can grade it from here to here. But you can already grade it. You can already grade this. How the I will not swear, but how can you grade this shit? Alright? I'll talk about it once I've finished, right? But then you're gonna see this. So this is pretty much what I predict market to do, right? So original consolidation right here, somewhere, and how you can grade this swing already is by placing it from the believed intermediate low to the measured mitigation high and low. So now we're connecting the things I've already taught you guys. All right, we're already connecting them, connecting the dots. So as you all know, we can see the breakers high will jump down into the daily to measure this. Breakers high, fair value gaps low. We're gonna measure this. So we take from this high to this low. Measured mitigation is precisely here at this order block right here, which is also an IPDA alignment. So we have this. Bam. Precise level. Alright. Now we can place this and derive the graded price swing. Alright, which will overall happen, of course, in the future, but this high will definitely get tied into. Alright. So bam. Now we have the derived level, right? So we used overall graded price swing. We have the gradient high and a gradient low. Right? Give us this level. And this is overall measured mitigation, right? So you have from 1, and over here you see a reconsolidation. So I'm literally teaching you guys how to know what price will do in the future. So here we have a reconsolidation in the future. Here we have the small money reversal. Here you have another reconsolidation. Right here. So price will go down lower, go up. This level, go down lower. Do the original consolidation. Do a reconsolidation here. Small money reversal right here. Do reconsolidation here. Go down lower, sweep this original consolidation. Oh man. Oh man. What if price actually does this? Alright, and from my perspective, this is what's most probable for price to do. Not gonna lie. I'm not lying to you guys now. Alright? If this happens, alright, what do you say? Alright? What do you say if this happens? Alright, you're gonna be impressed. But it's gonna happen, alright? It's going to happen. Just watch it, guys. Just watch it. Alright? It's gonna be fantastic. Alright, it's gonna be fantastic showing you guys that it actually happens, right? So I've shown you guys weekly high level, alright? That's something I show everyone, alright? However, for this week, I am gonna show you. So this is overall my predicted weekly high, my predicted weekly low. So open, high, low, close. Alright? That's good, Trantatos. That's super good if you inverse me. Alright? After we have seen that original consolidation, start of market maker model upwards, and it's a market maker sell model. Alright? Tuesday low, as we're gonna have a full week of selling. So full week of selling. After a week of selling, you're gonna see Tuesday low, be an intermediate low, and original consolidation. Total soup, high. Of course, here you're gonna see a reconsolidation somewhere in here. High of a premium, constant encroachment. Lower, reconsolidation. If you drag the reconsolidation from the left side of the curve to the right side, you're gonna find pretty much a reconsolidation right there. Sweep of that original consolidation, which is overall projected to get formed here. Alright? Crazy sauce. Crazy sauce. Like I told you guys today. Alright? Like I told you guys today. Now, I love doing things in hindsight. Or I love doing things, when they have not, played out yet. Because that literally proves things that something is actually doing something crazy with the markets. Because how can you predict the market like this? Alright? And it's just by overall knowing characteristics and what's most probable to happen, because this is no enigma, guys. This is no enigma at the end of the day. This is just knowing what's most probable happening just because of the data you have previously collected. So it's nothing crazy. It's nothing enigma shit. It's just looking at probabilities. And from my stats, right, if you now go into seasonalities, you will see that this is perfectly aligning with our overall bias. And I'll actually load up the seasonalities here and put them on my chart. I said this call was going to be saucy. Alright, I said this call is going to be saucy. You won't be able to see this. However, I will pull up the seasonalities on the chart. So just bear with me for a second now. Alright, while I put the seasonalities and plot them on the charts. So I said this call was going to be saucy. And I will include like where I derive the seasonalities from. And COT, where I look at them as it sauce. But I will plot them as well. And it's going to be in the student shit. Alright. What we do is that we literally, I teach them how to predict highs and lows. So student shit is on another level, but this is of course on another level from your guys' perspective. So just plotting this, I think you guys might be able to see this. So can you guys see this? Yes or no? This is the seasonalities for the DXY. So you can see pretty much we had a high here, we pretty much should have seen a low here. We saw a low right there. But if we now go into where we actually are, from a most probabilistical stance, what we will do is that we will sweep this intermediate low, right? And that's pretty much what I think will happen next week. So I think we'll trade down lower, sweep this, form an intermediate low, like it says pretty much here. I think it will form pretty much here on a Tuesday, right? Here on a Tuesday, more or less. So somewhere in here on a Tuesday. So maybe next week Tuesday, forming the low, intermediate low, and crazy sauce, guys. Then what you see is that we actually tend to trade up higher. So from overall, from October onwards, what we tend to see is that DXY actually going up to December. All right. So if we now know that seasonally, what we tend to do is that we tend to actually go up October, November to December. That provides overall statistically, because this is statistics, right? That provides overall the DXY, or proves that the DXY seasonally, statistically, usually sees higher prices, right? So this is why I think we're gonna form an intermediate low here, and this is why I think we're gonna overall trade up here, because it perfectly aligns with the seasonalities as whoa, oh my gosh, saucy things. All right, so I perfectly align my analysis with the seasonality. So look, low, low, higher, higher to here, lower, lower. And what is this? Isn't this an original consolidation on the seasonalities? And isn't this a market maker sell model on the seasonalities? I would say so. All right, I would say so. All right. I'm sorry. Bam. All right. So crazy thing, right? Crazy saucy today. Yeah, man. This is gonna be crazy saucy. So now when we know this, we can just translate that to every single pair. Exactly. I just copy pasted. Yes, that's what I did. So I derived it from market bulls, which is my primary source for COTs. I look at COTs, by the way, and seasonalities. All right, but now let's just go, because now when we know what the DXY will do, we pretty much know what EURUSD will tend to see as do, because it's pretty much inversing that. So as you all know, I talked about, look guys, last week I talked about this breaker block. So if you can see this breaker block right here. So I talked about this high, low, and higher high. See, and this is pretty much the candle forming the high, which overall got swept and had an intermediate low. That's overall the breaker block, right? Which ICT says. So you can see pretty much we've just traded down to the breaker block, combine that with overall that on the daily. I think we saw overall an breaker. So, or 4 hours, sorry. So had a breaker. You can see breaker here. You can see breaker here on the monthly. So breaker plus breaker. Low of the week. I talked about this as well. So I pretty much spooled out the high low of the week, where I actually said that we would tend to see a continuation upwards throughout this week. So what am I looking for this week overall? I'm looking for higher prices, right? I'm looking for higher prices, net higher prices, right? So I'm looking for this intermediate high getting taken out. I'll do this on the daily because it's much easier. So I think a weekly low, will get settled in overall on the Monday, like the DXY, high on Monday, DXY high here. I think EURUSD low will get settled in at the mean threshold of this little order block right here, right? So weekly low right here on Monday, taking our time basically, doing an STA for us on Tuesday, Wednesday, Thursday, Friday, bullish. What do you tend to see after a buy program? You tend to see a market maker, buy model forming, but you tend to see as the sell swing forming, right? So you usually see an high on a Tuesday, all right? Everyone with me? Yes. So you tend to see a Tuesday high. As y'all can see, this rejection block has multiple time frame closes. You can see on the weekly and the daily, the rejection block is on the same time frame. So I think the rejection block overall, will be high, or we might take the buy side. However, we don't take the buy side on the DXY, aka doing an SMT. So instead, the DXY goes into this rejection block, forms a low on a Tuesday, but EURUSD instead takes out this high. That would be an SMT, right? So it's simple, right? So overall, Tuesday high, forming a regional consolidation in here. Where would we see overall us reversing to? We would reverse to a potential discount low, as we're looking for a premium high right here. So we're looking for overall a discount low. And your homework for this week, because you're gonna get a homework, is overall to measure the mitigation, all right, in an overall discount, and find out the precise level for the small money reversal for the market maker, market maker buy model we're gonna see in the future. All right, that's your guys' homework. All right, to find out. Simple homework, right? So it's gonna be somewhere in here. That's what I'm telling you guys. All right, maybe even in this breaker. All right, so from this PDM matrix at least. So from this swing low to this swing high. All right, I've not done it yet because I don't really need to look at it yet. But that's your homework, right? To find out where your prolonged small money reversal buy is gonna be. All right, I said buy. Oh my gosh, because you should wait for an model to form right in that level, which you overall gonna get. All right, and then you're gonna get the small money reversal right there. You have an easy buy to an original consolidation, which is gonna get formed here. All right, simple, right? Simple, because if we now form relative wisely here, all right, that's even more probable that we'll go up and sweep that. All right, because I think we just tend to see a little bit lower prices, and then take out the buy side liquidity here. And now I'll pull up the seasonalities for EURUSD, and you guys will see it on the YouTube later, because this is gonna be on YouTube of how I actually implement the seasonalities to my charts. And of course you're gonna see this. You're gonna see TT Trades now talk about this. All right, just because he's gonna take my shit. Of course, that's what he does. So you're overall gonna see seasonalities. I'll just align them. So I have October here. So guys, I think you guys can see this. So you can see this seasonalities right here. What we tend to see is an high getting formed, right? We tend to see an high getting formed. And then what we tend to see is overall an high getting taken out an intermediate high. Right, that's precisely what I think will happen. So I think we'll take out an intermediate high. You can see it on the other data. Wait, I'll pull it up. I'll put the data here better. That's better. But you can see here. So we tend to see, you can see here, intermediate of this orange line. I'm looking for this orange line, but you can see this on the yellow line, on the green line. You can see this on the purple line. You can see this on the multiple data sets, and this is pretty much what I look for. So you can see intermediate high right here, swept that intermediate high, precisely like we're looking for. We're gonna sweep this intermediate high. After that, what we tend to see is low prices. Isn't that exactly what we're looking for? We're looking for lower prices, right? Into a discount. Small money reversal of an original consolidation in here. Can't you see a consolidation in here throughout all of September, right? Wow, interesting, right? Then lower prices, all right, discount, small money reversal, buy for you guys. You're gonna buy and you're gonna have a stop loss somewhere here, where your model tells you to have the stop loss. And I'll give you guys too much sauce, but this is fine. Then higher prices, bam, taking those rhetoric wise which gonna get formed. Easy, guys, easy. All right, easy, guys. Bam, right? Sauciest call, more or less ever done. Not ever done, but ever done for you guys. All right, for the students, it's always saucy. But we're not done. We're not done yet. So now, what I think will happen, all right, is that we'll have an SMT between EURUSD and GBP/USD. All right. So here's the thing. You listen to this. Listen to this. You can't only listen to this now, guys. You can't only have EURUSD and the DXY alone. The more assets you're pairing up and looking for small money technique on, the better and more precise you're gonna be. Because if you have multi-asset SMTs, that's where the high or intermediate high will be. So you should include assets. It's gonna be uploaded on YouTube, yes. And Noe, bro, you should watch the student calls because those are much more in depth. So the students calls is what you should be in Noe. All right, Noe 2, 3, 4, because you know it's you know, yeah, it's too much sauce, bro. So you should include as many assets as you can to look for small money techniques on. That does not mean, however, that you should trade on those assets. You should have one asset which you're trading on, and you should have multiple assets which you're looking for small money technique on. Alright? Simple as that. Alright? So, as soon as you see an SMT, and look, we have already seen an SMT, guys. We have already seen an SMT. Look at this, guys. Look at this. Isn't this rejection block now even more probable? Because look at this high right here of Monday, 17th of July. Monday, 17th of July. We have taken out that already. We haven't done it yet here. SMT. Bam. Just supporting our claim that we overall, once taken out this time is liquidity, going to overall head down lower. Alright? Simple as that, guys. Alright? Same thing goes for AUD/USD. I always use these to overall compare. Alright? To look for SMTs. Alright? A lot of people, I use these three and the DXY, but the DXY is different. Oh, it's different, you say. I'm not going to tell you how it's different. That you guys got to find out yourself. Alright? Because I'm going to give too much sauce if I go and talk about the DXY too much. But, yeah. Yeah, guys. Yeah, guys. How do you like this? It's good, right? It's good. Shall we continue? Shall we continue with the sauce? Yes or no? Yes. So, going now to NASDAQ, which a lot of people like. Alright? What I've talked about, what I've said to you guys in the previous calls, you can go back on my YouTube channel. I've said that this low must get taken out. Why does this low need to get taken out? Alright? It needs to get taken out just because it's a future prediction low. And the students know this. And the students know why it's a future prediction low. I'll not talk about why it's a future prediction low. Alright? I won't mention it here. I'll just tell you that this is my John Quitter for NASDAQ. And this is what I'm waiting for. And that perfectly aligns with what I'm thinking for USD. Because as of now, alright, NQ, alright, or NASDAQ, right, NASDAQ 100, this is CFD version, right, so it's not as accurate. But on the higher time frame, it's supposed to be, you know, slightly accurate, right, so you can still use it, right, so it's nothing big to worry about. So, isn't NASDAQ now mirroring what we want to see on EURUSD? I'll tell you guys that it is mirroring what EURUSD will do. Alright? Because we're still, alright? We're already now starting to see a small money technique starting to take form. As of NASDAQ is already going much lower than EURUSD. Alright? Those two should be correlated. Small money technique, guys. What we're looking for now is an intermediate high getting taken out. Alright? Now, if we don't see the same intermediate high getting taken out on NASDAQ, alright? If we don't see the same one getting taken out on NASDAQ, that's an SMT again. Alright? The SMT is big, but you can see multi SMTs. Like I've talked about, stack freaking SMTs. SMTs is not externals. It could be externals, right? But it's not externals. However, stack those SMTs. Don't use one singular SMT. Stack those SMTs. All right? Because SMTs is happening all over the place. Anyways, guys, I think that was enough sauce, all right, for today. Actually, all right, you're gonna get this call uploaded with the other call. He does not talk about SMTs between forex and indices. I don't think so, at least. You could maybe, but it's simple, right? It's simple. Both are correlated. So you have EURUSD and Nasdaq being correlated. You have GBP and US30, and of course you have all of these being correlated as well. But you have, you know, time frame alignments, mirroring alignments as well, which is another thing. But yeah, you can learn grading swings because I've taught them. All right, I've taught them. So thank you guys so much. Now you know literally the future. Literally the future. So now you just gotta watch it. Alright? And now replay this after it had already happened. Alright, so after these things have played out, watch this call again because you won't believe your eyes. Anyways, guys, thank you all so much. Alright, watch my lectures on YouTube, as that's where I give the free sauce. You know, I'm trying to give out as much free sauce as well. And you know, going to push this free sauce a little bit, right? I'm gonna push it so you guys can get it, right? Because I've not previously done any sauce, but now I've started doing sauce because it's saucy September. Thank you guys so much for this call. Thank you guys. See y'all. Bye, guys.